Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He takes a look at the impact the Fed's 0.5% rate cut had on the markets. The Dow and S&P hit new highs, but the Nasdaq did not. Ross warns the euphoria caused by the rate cut may not last long. He also has a special offer for our listeners. BC Conservative Party leader John Rustad tells us about his economic plans if he's elected premier in October's provincial election. Recent polls show his Conservatives are running neck and neck with the ruling NDP. Author of the second edition of the book, With the Bubble Burst Surviving the Canadian Real Estate Crash, Hilliard MacBeth digs deep into the real estate scene and analyzes the latest Trudeau government changes to mortgage rules. We'll talk to Ross Clark right after this.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit Recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to This Week in Money.
Nice to be with you, Jim.
Ross, do we have a special offer for our listeners?
Yes, new subscribers get 25% off an annual subscription. And you can find that link for that one at the website, chartsandmarkets.com.
Ross, what kind of an impact did the U.S. Fed cutting its central banking rate by 0.5% have?
Well, this was the event that everybody was waiting for. Yes, it became a 0.5 point rather than a 1/4 point. But, in reality, if you look at what's been going on in the open market, the bond market has had this extended rally, and even on the short end of the curve, when you look at the 3-month and the 6-month T-bills, they've been dropping dramatically since the middle of July. So a 2-month decline in the rates there. T-bills are down 70 basis points since July. The Fed's dropped by 50. So the open market is still pricing in enough on the downside for another 50 points as far as the Fed might be concerned. And that's the talk, that there's a couple more decreases by the end of the year. Now, was there going to be a sell the news type of story, or and in this case it wasn't. Who knows? Each time it's a little bit different. But we had a little bit of a hiccup after the announcement on Wednesday. But by the time we got around to Thursday, markets were strong. And, if we look back, the various first drops in Fed funds rates in 2020, the market rallied after that. If we take a look at 2007 and in 2001, the move by the Fed was followed by a minor move up in the equity markets for the next 3 to 4 weeks. Nothing major compared to what had happened previously, but once that rally had run its course, then it was pretty much straight down for the next many, many months. So in this case, we've had a decent move on the upside with a couple of pauses along the way. This rally to new all-time highs in the Dow and in the S&P this week looks like a breakout, but we want to be exceptionally careful. If this thing starts to roll over and fails to hold the breakout, that would be a first area of concern. And when I look back on the way things moved in 2001 and 2007, the catalyst on the downside was once you had the first close below a 10-day moving average. So you can move up now with a small upside bias for the next few weeks, but as soon as it starts to show signs of rolling over, you could be looking for the correction. And, here we are, middle of September, and historically, second half of September into October is a period where you will quite often find some weakness, and then some of the best buying opportunities of the year around the end of October, the early part of November, coinciding as it would be with the U.S. election, and markets have historically rallied out of the election regardless of who gets elected. So at some point in the next maybe 6 to 8 weeks, we'll be looking for, hopefully, an opportunity to pick up stocks at a cheaper level.
What's going on with gold?
Gold is up nicely on the year. What's it, 25% move or more now on the gold market? But it has been, up in fits and starts. The recent move has been really one of slowly gaining momentum for the last month or two. Now, typically, the gold market in a move like this will end with a bit of some excitement at the tail end of it. And as of now, when we look at our oscillators and we took a look at the relative strength, we're not at extremes. You would expect to see the RSI get up into the level of 80 or higher. That's the relative strength index. And, historically, something more around 85 or higher could be expected. And we're just now flirting around 60. So there's room for this thing to run. But the biggest part of the move usually happens in the shortest period of time. So at some point in this next few weeks, if we see those extremes, then one would want to take some money off the table as far as the gold and the miners are concerned. And the miners this week did not badly, but not the same strength that we saw in bullion. So once again, time to enjoy the move, but be cautious.
What's happening in the crude market?
Crude, we had a good bottom here at 66 a number of weeks ago. We've rallied to 72. Been up here now for a week or so, and that's up to what had been the previous support level. So it's a decent area to look for resistance. And if anything, the seasonality is down from here through November, December. So any movement, I think, is more to the downside as we press through the next few weeks.
What's happening with the U.S. dollar?
The dollar is just biding its time. It was about 3 weeks ago that the dollar index became oversold. We got capitulation readings when the spot price was around par 50. Rallied up to 101 3/4 and hit the 20-day moving average, which historically is the key that you want to be watching when the dollar has been bottoming out. Now, our cycles show that we should have a low at the end of August. We've had that. We've had the bounce, the recovery, but we've been now 3 times up to the 20-day moving average and failed, even as of this Thursday. Had an intraday penetration of the moving average, but back down to par 73 at the end of the week. And we need to see it close up through 1 1.25 and see the moving average turn to the upside before you'd get any kind of a base signal. And if that happens, then that's going to take some of the wind, I think, out of the precious metals. But for now, it's just taking its time, and there's not a lot more to be said about that one. The Canadian dollar has moved like most of the other currencies, sold off into about 10 days ago. We had been up to 74.25 in the currency, back down under 73.5. We've got a decent bounce, but at this point, I think you want to keep an eye on the other commodities, in particular the oil market. If oil starts to roll over here, that could have an effect on the Canadian dollar.
Ross, can you tell us again how people can get your special offer?
The website is chartsandmarkets.com, and there's a link right on the front page there. Also, we've got a list of the junior miners that we've been keeping an eye on. This is independent of the seniors or the ETFs like the GDXJ. But the juniors, they tend to provide some pretty good opportunities in the sector when things get hot.
Ross, thank you so much for chatting with us.
Good to be with you, Jim.
Coming up, John Rustad, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is John Rustad. He's running to be the next Premier of British Columbia. He's the leader of the BC Conservatives. You can follow John on Twitter and X at John Rustad 4BC. That's the number 4. That's John Rustad, the number 4, followed by BC. Welcome to This Week in Money.
Thank you for having me on today.
We want to get into the economics of British Columbia, but first, how important is it to get the vote out?
Well, this is going to be a very critical election, and all politicians say that going into elections, but when you look at the damage that is being done in British Columbia, the fact that our resource sector is collapsing, the drugs, the crime that's happening, the fact that a third of British Columbians are thinking about leaving this province, this is a critical election in British Columbia.
Wow. And BC, of course, always had a huge net influx of people. How disappointing is that to you as a British Columbian to see people want to leave?
Well, I think last year, 70,000 people left British Columbia. And when you look at British Columbia, it has all the resources and all the potential we could ever want. To see that 1 in 3 are thinking about leaving this province and 1 in 2 youth are thinking about leaving this province is very upsetting. This is a province where people should be able to come and build a future for both for themselves and for their children and grandchildren. And that has been lost under an NDP government.
Is it true that to have long-term success, governments need to be fiscally conservative and socially liberal?
I think at the end of the day, people just want to have good decisions, making common sense. People just want to see the basics being done and not ideology. And so certainly a lot of that, the fiscal side is very important. You need to make sure we have a good, strong economy. Otherwise, nothing else works. But you also want to have those good social safety nets. And so I think that is an important mix that needs to be found by any government.
BC is a forestry and mining province along with some oil and gas, but now we're no longer a forestry mining resource-friendly province. What are your plans to turn BC back into an economic powerhouse?
Well, that's going to be the key in terms of solving healthcare or crime. The addictions problem is we need to have a strong economy. We need to take advantage of our resources. And we have a government that is quite frankly hostile to our resource sector. They've driven up the costs. We're the highest cost producers. People can't compete, and people don't have confidence to invest. And I look at it, if we want to solve things like affordability, you can do some work on the tax side, but ultimately we need to see higher wages. And the only way you have higher wages is if you have a strong economy. You have people wanting to invest and looking to build that future. And so there's lots we need to do to get the red tape out of government, out of the system. There's lots that we need to do to rebuild confidence and to make sure that we can get permits done in a timely way, and there's a reasonable expectation of how things will be able to operate in this province. And all of that has been lost under the radical approaches by David Eby and his NDP.
What are your thoughts on the World Economic Forum's Agenda 2030, 15-minute cities, C40 cities, and how the BC economy could be affected by them?
The way I look at all of those sort of things is British Columbia needs to come first. We need to make sure that the people in British Columbia can build that future, and we want to be able to support British Columbians in being able to achieve that. I'm not interested in any other jurisdiction or any other body from outside of British Columbia dictating to British Columbia what we should do. And so I look at it, I think, there's some things in there that make sense, but most of that is all about ideology and will not actually help people in British Columbia.
Everywhere we turn, there's government regulation. Bureaucracy hurts the economy. Will you focus on eliminating as much red tape as possible?
It's interesting. I'll give you one example of red tape that just, to me, doesn't make any sense. Germany has twice the population of Canada, but Canada has 10 times as many administrators in health. Close to 40% of our nurses are administrators. We need to do everything we can to try to keep the focus and the resources on people, on the patients. The same thing goes within government, and I think it was Mark Twain that famously said, the bureaucracy is expanding to support the expanding bureaucracy. We need to look at everything that's happening within government to make sure that we're focused, that the dollars that we're given in terms of tax dollars are spent wisely and focused on patients and not under ideology or pet projects of a government.
Now, the latest study found that for every private job created in BC, there are 5 government jobs. How important is it to have a growing private sector if a significant number of jobs are eliminated in government, as those people will then be needed in the private sector?
Well, we certainly have a labor shortage in British Columbia today, and whether it's doctors or teachers or whether it's truck drivers or carpenters, it doesn't matter. We have a need for more labor in this province. And so I really look at things from a perspective of we need to unleash the economic potential of the private sector for us to be able to thrive as a province and solve some of these issues. Since 2020, since the pandemic, this government, the public sector, has grown all the way to about 400,000 people. Back in 2017, it was around 270,000. So it's seen a huge growth. And yet in the private sector, we've seen very little growth in jobs, if any. And so you can't have, a balanced budget. You can't have the revenues you need if you don't have a healthy, strong private sector that's hiring people and paying better wages.
Do lower tax rates tend to bring in more government revenue due to the economic stimulation?
There's no question that when you look at the tax mix, you have to find that sweet spot where taxes are low enough that people can be able to thrive, but also high enough that government has the revenues. So you can't go to zero, and you certainly, where we're at today is really putting the brakes on economic activity and the confidence in British Columbia. I know a lot of companies, a lot of individuals who are leaving this province because of our high tax rates and because of all the red tape. So we need to be able to lower taxes in British Columbia, and that's one of the reasons why we're committed to completely getting rid of the carbon tax.
The healthcare system looks to be a dysfunctional money pit. Do you think adding natural healing and naturopathic doctors to the medical services plan, coverage for everyone, along with bringing back the unvaccinated healthcare workers without stipulations, could immediately relieve an overburdened medical system?
I certainly think we need to be bringing back the healthcare workers that were let go. I think we need to be doing everything we can to try to encourage them to be back working in our province. But we do need to take a holistic approach to healthcare. We need every service that we can to be able to meet the needs of people. But the big shift that we need is we have a healthcare model that is focused on the system, and it is failing. We are the second most expensive healthcare system in the Organization of Economic Cooperation and Development, 30 nations, and yet we are the second worst in terms of outcomes. We are going to be looking at the models of Europe that are universal healthcare, but delivered by both government and non-government services. where the funding follows the patient and not the system. And that way we can better utilize health professionals, have better opportunity to be able to attract new professionals and retain the professionals that we need to be able to provide those services.
How embarrassing is it for British Columbians to have to go to other jurisdictions for necessary operations?
Well, I think it's a indictment of the collapse of our healthcare system and the crisis that we have. We need to be able to rebuild those services, but at the same time, we also want to make sure that patients have the services they need within the prescribed wait times, especially when it comes to things like cancer. We're not meeting the prescribed times now in British Columbia. There's many people who are quite frankly, their situations are being made worse because of the healthcare system that is failing. So yes, sending some people outside of the border is going to need to happen, certainly to be able over the short term until we can build out that additional capacity in BC to be able to treat the people and make sure that they can stay home and close to families.
In your first term, do you think you could make BC the go-to place for doing business, investment, and economic prosperity?
I am quite confident that in a first term, we will set the framework for people to look at British Columbia and say, there's a jurisdiction that gets it. There's a jurisdiction where we can invest. And most importantly, there's a jurisdiction where we're able to pay the wages and have the workers that we need in this province to be able to succeed. And that's a framework that needs to be done. There's a lot of shifting, a lot of legislation that needs to be cleaned up to allow for this to happen. But I think we can get that in place so that we can create that fertile ground. So at the end of the first term, we'll start to see those investments come in. And as we go into hopefully a second term, obviously we need to win a first term. That's where we'll start to really see the success of the steps that we'll be taking.
Now, people are really jaded by politicians promising voters whatever they want to get into office and then ignore the promises once they're in there. Will you do what you say you're going to do?
It's one of the things that I've tried to do all the way through here is I'm only promising the things that I can actually do. I'm not going to make promises that I can't keep. It's lots of politicians traditionally have done that. They've gone through and just promised everything to everybody just to try to get elected. That's not who we are. We're standing on our principles. We're standing on our values, and we're going to fight to make sure that British Columbia is a good place for people to want to be able to keep their families and raise families. But there's one more step that we're going to take to try to resolve and make sure that people have the full information so that they can't just, look at government spin and wonder what's going on. We're going to make sure that we make freedom of information requests obsolete by putting all the information that can be made public out in the public voluntarily. So they will have the facts and they'll be able to judge governments and political parties based on facts as opposed to based on political rhetoric.
Taxpayers Federation said BC spent nearly $500,000 on secret polls. How secret is your government going to be?
Well, that's what I say in terms of making freedom of information obsolete by having all that information out there. That will keep government accountable. That will keep government very open and transparent. Because the public will have that information and they'll hold us accountable accordingly. This government, this NDP government, has signed more non-disclosure agreements than all of the other governments in British Columbia's history combined. They are a very secretive government. It's pretty incredible actually when you look at just how they're governing and what they're keeping from the public.
Would your government open public contracts up to anybody who can provide the service for the lowest amount of money instead of the current system where only a few select unions can work on a project?
The big thing that we want to be focused on when it comes to infrastructure and the things that need to be built out in BC is we want to de-risk these projects. We need to make sure that when we're budgeting for these projects that it's an accurate budget. We need to make sure the scope of a project is well defined, and then we're going to be looking for bids on these projects from whatever organization that would like to bid on them, based on that scope of practice, and transferring the risk from government to the people that are bidding on the project. Right now, every single project this government is doing is way over budget and over time, And that kind of irresponsibility has to come to an end.
The last time a conservative-leaning government was in power, they closed 11, 12 hospitals, had medical premiums. What's your take on the medical side?
Well, actually, the last time there was a conservative government in BC was 1927. So,
wow.
However, the last time there was a center-right government, obviously, was under the BC Liberals. And we have no intentions at this point of closing any healthcare facilities. We're certainly not looking at bringing back MSP or anything like that, even though the NDP are lying about it, saying that we will. We haven't got any plans to do that whatsoever. But there is some shifts that are needed as you look at going to the European model. I'm fully expecting that there will be a broader range of services offered within our healthcare model, better innovation, and like I say, better utilization of healthcare professionals than the sort of archaic system that we have today.
Now, ICBC right now, the government insurance, it's mandatory for all motorists in British Columbia, has a no-fault thing. So if you get hurt, you don't get any monetary compensation for that. And it also probably doesn't discourage people from having accidents being no fault. Would you bring back fault insurance, and would injured people get compensation?
When it comes to ICBC, for minor injuries, we will keep it as a schedule, whether it's no fault or otherwise, so that we don't end up burdening up the court system with people going after cases associated with these minor injuries. However, for major injuries, if you are in the unfortunate situation of having a major accident, I don't believe a Crown Corporation should be reading from some sort of table and saying, this is what you get. I think that you should be able to have somebody represent you and fight for what you need to be able to restore the quality of life that you can after a major accident. So we will be changing that high end of the of ICBC, which represents about 15% of the accidents in British Columbia.
There's only one taxpayer, but of course there's several layers of government that seem to think there's several individuals living in that one house. Would you simplify taxation to make sure that it was efficient and not gougy? I don't know if that's even a word.
Well, it's the old saying, whether it's federal, provincial, or municipal, there's only one taxpayer. And there's three governments that are asking for taxes from through different ways. And at the end of the day, if people cannot, make a go of it in British Columbia, we need to make some changes. And so, for example, with half the people in this province struggling to put food on the table and pay their rent, and a third of the people thinking about leaving, we need to be able to assure them that they can actually be able to stay here. So tax reform is something that we do need to do, the major tax reductions. And the other thing that we're going to look at doing is we're going to look at bringing in a piece of legislation that says there can be no new taxes or no increased taxes in British Columbia except by referendum.
The California system?
Well, I wouldn't call it the California system because anything you look at in California seems to be an absolute disaster. But I just look at it from a perspective that for a province, if you need to have more money, you need to be able to go to the people and make the case. We cannot see these continual tax increases and these new taxes being brought on left, right, and center. People just can't afford it.
Would you be upping the personal exemption for BC taxes? Alberta several years ago went from 10,000 or 12,000 to 25,000. Would BC be better off if we had the same thing? You get to keep the first amount of money you make.
I think BC already has about 2 million people in this province that are currently not paying taxes. It's probably higher than that. It's probably closer to 2.5 million people who are not paying taxes today. And so I'm not looking immediately at making those kind of adjustments. However, like I say, I am looking at significant tax relief. For example, just getting rid of the carbon tax in British Columbia will put $3.5 billion back into people's pockets in this province.
Is BC going to be more resource friendly right now to get a mine going? If you get, it takes 10, 12 years, and obviously there's a demand for our resources right now.
There certainly is. We need the copper. We need the other resources if we want to be building out more electrification in this province. and as well as anywhere else in the world. And there are 17 mines in British Columbia that are currently permitted or about to be permitted. Those mines represent a $38 billion investment that would generate between 20 and 30,000 jobs and add over $800 billion to British Columbia's GDP. We need to do everything we can to be able to get these mines up and running. We need the resources, we need the good paying jobs, and most importantly, we need the revenue from government to help get rid of this $9 billion deficit that we have.
Would you change the moratorium on uranium mining in BC, and would you be open to atomic power plants?
British Columbia last year imported 20% of the electricity that we use. In British Columbia, 84% of the energy we consume are hydrocarbons. Only 16% is electricity. There seems to be a huge demand for increased use of electricity, whether that's heat pumps or electric vehicles. We do not have the power. We do not have the electricity to be able to power these demands. So we are going to need to increase power in this province, electricity in this province. And just for example, if every household and every business, every commercial business in British Columbia were to have to use a heat pump instead of using natural gas for heating, we would need to build the equivalent of 6 or 7 more Site C dams. We're likely never building another major dam in this province. So that means where's that power going to come from? Wind and solar can be part of the mix, and I think that's an important component, but they're not baseload. They're not reliable. So we need to be able to build out additional baseload, and that means that we are open to having a discussion with the people in the province of British Columbia of using nuclear power, whether that's small modular reactors or other nuclear technologies.
Why do you think there's been this switch where all of a sudden natural gas became evil? Because just a decade ago, they were pushing natural gas power for your cars, for your homes, because it's very efficient, very low polluting. Because in China, they're switching to coal to power their electric cars. How is that an improvement on the environment?
Yeah, it's it's probably not worth digging too deep in terms of the logic behind all of these things. But the reality is, we are going to need to use hydrocarbons for many decades to come. We cannot create the kind of electricity we need to replace it. So, for example, all of our transportation, which includes all of our boats and trains and planes and all of our cars and trucks, if all of that had to be electric, you would need to triple the amount of electricity produced in British Columbia. That's the equivalent of building out about 22 Site C dams. And so it's not going to happen anytime soon. So hydrocarbons are with us for a long time to come. We do need to build out that capacity and electricity, and we need to have that conversation with people. What's it going to cost? What are the issues around it? What does that do to our competitiveness? But at the end of the day, natural gas is going to continue to be an important mix in British Columbia. Not to mention, we should be taking advantage of our natural gas and exporting as much as we can to generate the revenue to try to get rid of that $9 billion deficit we have.
A lot of jurisdictions have used their oil and gas revenue to top up pension funds and so on. Do you think it's time to turn that money back to the people like Alaska does? Half of their oil and gas revenue goes directly to citizens.
I would love to be in a situation to do that. We need to look at actually expanding what we can in terms of exporting natural gas. But I think the first and most important thing to do is to stop digging the hole. We have to stop having these massive deficits and get to a place where we can get rid of the deficits and make sure that our debt is under control. Now, in the next few years, with what is projected for growth in our debt in British Columbia, the amount that we'll just have to pay in interest is more than half of the ministries in the BC government combined in terms of spending. This is absolutely crazy. So we need to do everything we can to generate the revenue to get rid of our deficit and start managing our debt in a much better way.
The former head of the BC Trucking Association said the province is wasting about $3 billion a year because truckers just sit there and idle, choke points all across the Lower Mainland. Do we need more bridges?
Well, I think we need more lanes to create less pain. And so certainly, I condemn the provincial government for replacing the Patella Bridge, which is a 4-lane bridge, with a 4-lane bridge. 4-lane bridge for the Patella Bridge was built when Surrey was only 62,000 people. Today, Surrey's close to 700,000 people. We do need the additional lanes. We need actually to widen the highway, Highway 1 all the way out to Chilliwack, and stop Highway 1 from being a parking lot. We need to get the Massey Tunnel replaced. Likely that's going to have to be a bridge unless they've got the permitting in place for a tunnel. There's so much that needs to be done to be able to help to facilitate the movement of people and goods around the Lower Mainland, and it's just being bottlenecked and quite frankly ignored by this NDP government.
Would you push rapid transit all the way out to Abbotsford and Chilliwack?
Certainly, that's what we're looking at doing. We need to look at all kinds of transit options to expand out all the way out towards Chilliwack, and whether that's a rapid line, that's our sort of a direct line more closely linked to the Highway 1, whether that is utilizing the existing rail link for a transit type option, as well as looking at the busing services and expanding the local network of SkyTrain or other types of transit options. So there's a lot that needs to be done. When you look particularly at Surrey, all of the problems with TransLink come in Surrey, and I think that is really a shame to see that a city like Surrey has been treated like a second-class city for so long.
Do you think the government needs to focus more on these drug dealers that are costing the economy millions of dollars, maybe massive awards to turn in these guys peddling fentanyl that's killing and I call it wounding hundreds of people, thousands?
You know, there was a monument or memorial, I'm not sure exactly how to call it, up in Campbell River, where there's one blue flag planted in the ground for every man and boy who's lost their life because of overdose. 12,000 of these blue flags are planted in the ground. We need to be changing what is going on in British Columbia with the drugs. Our ports are wide open. We need to be bringing in a police effort, probably more of an investigative police effort with our ports to make sure that we're trying to stop the drugs and the criminal activity that's happening at our ports. We need to get rid of decriminalization. If you have cars coming and going from a suspected dealer, the police can't stop one of those cars and seize the drugs and use it as evidence to go after the dealer because it's decriminalized. We've taken tools away from police to be able to have a civil society and to deal with these things. But the most important part is beyond getting rid of this so-called safe supply, which is not safe, it's very dangerous. We need to build out a significant recovery regime, everything from doctor-prescribed treatment to short-term recovery to longer-term recovery to involuntary compassionate recovery and long-term care. There's a lot that needs to be done to resolve this drug problem in British Columbia.
An extensive inquiry was done into money laundering in British Columbia, but after the inquiry, where they found people were dumping hockey bags full of hundreds of thousands of dollars of cash in casinos, nothing has followed up. Would you make a more extensive effort to go after this illegal cash?
Yeah, I'm not sure exactly what has happened. The NDP government made a whole lot of noise about this and then seemed to have done nothing. So certainly that's something we're going to look at. We do not want British Columbia to be known as a safe haven for criminal activity and for money laundering. So we'll make sure that's part of having a safe and law-abiding community that we want to see in British Columbia.
John, where can people follow you and find out more about your campaign?
At the conservativebc.ca website, people can come in, they can join, they can sign up for our newsletters and for the information coming out. Of course, our platform is being released. It will be posted there. People can keep track of us. And I think that's the best way. Of course, on Twitter and other social media, if people want to follow me, it's just John Rustad for BC on things like Twitter. We're on Facebook. We're on basically all the social media networks as well. So I very much encourage people to get involved, to follow what we're doing. And this is going to be a very critical election, and it's going to be very important to make sure that people participate, get the information, and get out and vote.
John, thank you so much for being on This Week in Money.
Thank you so much for having me on. Take care.
My guest has been John Rustad. He's running to be the next Premier of BC. He's the leader of the BC Conservatives. Coming up, Hilliard MacBeth next on This Week in Money.
Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBeth.McLeodPartners.com. Welcome back to This Week in Money.
It's always a pleasure to be on your show, Jim.
Hilliard, can you tell us a bit about your book, When the Bubble Bursts, that's on sale now?
So in 2018, I wrote the second edition of When the Bubble Bursts, and it goes in deeper into the causes of the economic crisis that led to bubbles all over the world. And we compare to Japan and some of the other situations where bubbles have happened. But the amazing thing about Canada, as the book covers, is the amount of household debt that's been associated with the bubble. And there's only one other country in the world that is similar, and that's Australia. Australia has a perhaps even slightly larger housing bubble and also a larger household debt to GDP ratio. So Australia and Canada are both struggling with housing bubbles, and the premise is that all bubbles burst, so therefore these two have to burst as well. But to my surprise, the Canadian bubble hasn't burst yet. And actually there were some moves this week to try and keep the bubble going a little bit longer by the government, allowing some new measures to allow people to buy housing at these prices with more debt. So it's very interesting to read now, even though it came out 6 years ago, in relation to what's happening today, because it's describing exactly what got us to this point and what's likely to happen next.
Can you talk about those changes, and are they good or bad?
Well, I think that they're trying to keep the bubble going a little bit longer, but also at the same time try and slowly let the air out of the bubble, which is of course impossible. It's possible to suck and blow at the same time. So, but that's what they're doing. So they extended the amortization to 30 years on mortgages officially. Unofficially, I think that was going on because people. But that's something that they had to do to keep things going. But now they've made it official for first-time buyers. So basically, what that means is people can afford more to pay a higher price because the monthly payments would be lower. But the other side of the coin, which not mentioned in the announcement, is that that first-time home buyer will pay more for that house when you include all the interest that they're going to pay on the longer mortgage. The longer the mortgage, the more interest you pay. So, and the second one, somewhat related but not exactly the same thing, is there was a limit of $1 million on a mortgage if you wanted CMHC insurance, and now the limit's been raised to $1.5 million, so a 50% increase in the limit. And of course, this is also kind of crazy because the only reason you'd buy insurance on a mortgage to get CMHC backing would be because you didn't have a minimum down payment of 20%. So people are buying $1.5 million homes, and because they can't come up, and they have to get it insured, so the lender will lend them the money because they can't afford the $300,000 20% down payment. So the CMHC insurance allows you to go down to a 5% down payment, so you can have a very small down payment on a $1.5 million home, but you have to pay a $60,000 insurance fee on that. Now, the insurance fee is not included in the down payment requirement, so it can be added to the loan. But again, that just makes everything more expensive. But the question that needs to be asked is, should people really be buying a $1.5 million home if they don't have $300,000 or they can't get the bank of mom and dad to give it to them? It's really questionable that people should be getting into that before they're able to save up that amount of money, because if house prices go down, as I'm predicting, they're going to have a bigger problem when the mortgage renewal comes up 5 years down the road. So those are the two main changes they made. They made some other changes as well, but those are the two major ones. And I think designed to keep the bubble going a little bit longer, but not likely to avoid the bursting of the bubble eventually.
Now, this week, the Fed cut their central bank rate by 0.5 point or 50 basis points. Do you think there are fundamental concerns about the U.S. economy, or is it being done for the American election?
So this time around, the Fed, going back to 4 years ago, had hiked rates by a total of 525 basis points. So they basically from 0 up to 5.25% interest. They use a range, 5.25%, 5.5%, and now they cut it by 50. So they're back to 4.75 to 5. So 4.75% interest to 5% interest. So this is one of the major hiking cycles that's ever happened in the history. Now, of course, they're starting from close to 0, which is also unprecedented. In previous cycles, rates had never gotten that low. So, but of course, they did that because they were reacting to inflation. Now, today, 4 years later, they're saying, well, inflation is basically under control. It's back down below 3%. Their target is 2%, but it's close enough to the target that they feel they can start cutting. And so that's where they're at in the cycle. The reason they're cutting, I don't think is related to the election. It might be, but I doubt it. I think really the reason they're cutting is because there's been several signs of a weakening economy, and they were so late we have to go back to the 4.5, 5 years ago. They were so late when they were raising rates. They waited a whole year before they started to raise rates. That's why they had to raise them so rapidly. And inflation ticked up, and then they said, oh, it's temporary, and then it ticked up some more. They said, oh, it's transitory, and then they ticked up some more. They said, oh, it's just something that'll pass on its own. And then finally they had to change course and start raising rates aggressively. And so now this time they're determined not to again miss the boat. And the missing the boat on this part of the cycle would be not cutting rates quickly enough. So they're trying to get out ahead of the cycle, or at least keep pace with the cycle, rather than get so far behind the cycle as they did the last time. So what they're doing is they're cutting rates, probably what they would think would be early, but the question really will be determined by whether we're in a recession or we're about to go into a recession. And there's a lot of signs that we're about to go into a recession. The main one is the uptick in unemployment. So unemployment bottomed out at 3.5%. It got up to 4.3%. In every cycle going back to 1945, when the unemployment rate has risen by that amount, it's continued to rise quite a bit more, and there's been a recession. So the attempt to create a soft landing scenario is probably the reason that they're doing this. They're trying to avoid having this weakness that they've already detected grow into a hard landing or a recession. I think they won't be successful. There'll either be another burst of inflation, which basically means we never had a landing of any kind, or we'll be in a recession fairly soon, as the unemployment indicator indicates. It's been very reliable. There's some other reliable indicators like the inversion of the yield curve, where short-term rates are higher than long-term rates, which has also been extremely reliable in predicting recessions. And both of those have triggered now, and there's been some other indications as well that the economy is weakening. So they're doing what they need to do to cut rates, but the soft landing crowd is cheering. They're saying that this means there's going to be a soft landing, but of course there's very, very seldom is there ever a soft landing. So we'll see what happens.
The Dow and the S&P 500 hit new all-time highs this week. Is this likely a sign of strong markets ahead?
Well, I think that the markets are really buying into the soft landing narrative, which is that we've done enough now to get inflation under control. Rates can go back down. below 3% from their current level of 4.75. And the game is back on. The risk on attitude is the right way to go. So they're taking that route. And but the problem with that is when you look back at previous cycles, you find out that after the first rate cut is actually when the market goes down. It doesn't go up. So of course, the people that are in the market now are not looking back at the previous cycles. They're just trying to figure out what's going to happen in the next few hours or the few days. But when you do look back at the previous cycles, as I've done and lots of other people have done, you find out that the market, for instance, 2002, the market kept going up. In the early part of that recession or that downturn, when there was 100 basis points of a full percentage point cut, and then the market really bottomed. The market went down a lot from 2000. That was the bursting of the dot-com bubble, and some stocks like Amazon went down 90%. So the rate cuts didn't help at all in that case. And similarly in 2008, 2009, very similar case, the market started to go down after the first rate cut, not resume its upward course after the first rate cut, which is what the bet is on now. So, but the main thing is the market is extremely expensive right now. When you look at the Magnificent Seven, as they call them, they almost all of them are extremely overvalued, especially Amazon. Interestingly enough, I mentioned that same stock again. Microsoft, a bunch of them are trading at very high multiples. So this is not a situation comparable to some of the previous cycles where the stock market was cheap. The one they like to point to is 1994-95, but the stock market was cheap then, and that's basically the only example of the soft landing scenario actually working out. But in that case, the cut rates and the boom leading into the dot-com bubble in 2000 was just starting at that point. So we could have that. That's the one possibility. I wouldn't rule it out. I don't think it's the likely alternative, but it would be that we'd get a new boom in capital spending, probably based on the AI phenomenon. So the AI phenomenon leads to huge boost in capital spending, leads to gains in productivity, because everybody can use AI to make themselves more productive, and we get another leg in the bull market. That's a possibility. But the more likely scenario is that the rate cuts are just a signal that the economy is weak, and we're either in a recession or we're about to go into a recession now.
Gold hit a new all-time high this week of over $2,600. Could gold be shining a light on the real rate of inflation?
Yes, gold's very interesting, and glad you brought that up. The actual inflation adjusted, so the peak was in 1980 at $850 an ounce, and today we're at $2,600. So obviously 3 times. But when you adjust for inflation over those 44 years, you find out that the gold has to go to about $3,500 or $3,600. So it's got to go another $1,000 an ounce to be equal to that $850 peak in $1980. And but the reason that gold is strong is that, well, there's several reasons, but one of them is that the central banks are buying gold all over the world. Some of them quietly, some of them are letting people see that they're doing it. Other ones are doing it very surreptitiously. And why are they doing that? Because they want to diversify out of the U.S. dollar. So they're worried about the U.S. dollar, and they don't want to be caught in holding a bunch of U.S. dollar denominated securities like treasury bills and treasury bonds and stuff, which is where most of that money that's floating around the planet goes into, or has gone into in the past. So they're hedging their bets with gold, and it's very interesting. I think the cut in the interest rates, all you have to have is inflation sort of be undervalued or undermeasured, if you like, by a point or two, and you've got a negative real rate of return, which is when after maybe 1 or 2 more cuts, and that's when gold really takes off. So we're probably in the early stages of this bull market for gold. I think one interesting thing to mention about that is that the gold mining companies, the shares of the gold mining companies, are very cheap in relation to the price of gold. So the price of gold has gone up quite a bit since 2009, let's say, but the price of the companies that are actually producing the gold have not. So they've been in a very early stage of the bull market, and that's a great place to get a hedge against the possibility inflation has a resurgence, or a hedge against the possibility that the Federal Reserve makes a mistake and cuts rates too fast, too far.
The U.S. dollar's been looking weak. What do you see ahead for the greenback?
Well, as we were saying, so if you think about the price of gold as just like the inverse of the U.S. dollar, the more gold goes up, the weaker the U.S. dollar is in the minds of central banks and speculators and everybody that buys gold. So it certainly looks like there's a rush to get out of the U.S. dollar, and there's some fundamental reasons why people might want to do that. The U.S. deficit, the government deficit, is absolutely enormous in relation to past cycles. The debt is doubled in a very short period of time, and the annual deficit is in the $2 trillion range, which is phenomenal in modern times. So people probably are worried that the U.S. government is getting into trouble with their fiscal situation, with some justification, because really what they've done is they've cut taxes, especially on the wealthy, but cut taxes for everybody, really, and corporations and individuals, and they just aren't collecting enough taxes to pay for what they have to do. They're basically down to a situation where, just pick one example, I mentioned $2 trillion deficit. Well, the entire Department of Defense, which is in the discretionary category of spending, obviously it's not discretionary. The U.S. doesn't want to cut defense spending, and neither Democrats or Republicans would ever cut defense spending. But even if they cut the whole budget completely from $900 billion down to zero, they still wouldn't even reduce their deficit by half. So that's how dire the situation is. And they're going to have to tackle things like Social Security and healthcare and all these programs that are mandated by law, and it's going to be a nightmare to get the laws changed, because no politician, whether they be Republican or Democrat, wants to be seen as voting in favor of cutting off grandma's pension or hurting the healthcare access for poor people. So it's going to be a very difficult time the next few years in the United States of America.
Does it look like the Canadian dollar is poised to move higher?
Well, only in relation to the U.S. dollar. So the Canadian dollar has been a little bit stronger lately. I'm talking small amounts, like 1 cent or 1.5 cents or something like that, because the U.S. dollar has been weaker. But that's the way we always look at the Canadian dollar, is in terms of the U.S. dollar. But we are in a situation where our problems are a little bit different from the U.S. We have some of the same problems the U.S. has in terms of government debt and that. But unlike the U.S., which is in pretty good shape in the private sector debt, because they had that tremendous crisis of mortgages in 2008, 2009. Canada never went through that. We never paid down our household debt ever. So Canada's got a different problem in that we've got a very high elevated household debt, really the second or third highest in the world, just after Australia and maybe one other country, as a ratio to GDP. So when the housing prices in Toronto are already down 20% from the peak in 2022, when people start to be unable to pay their mortgages and their HELOCs and their credit cards and their car loans and all that sort of stuff, the problem will be much worse in Canada than it is in the U.S. or elsewhere. And so that's when the Canadian dollar will show some signs of weakness. And it got down to about 71, 72, and now it's back up to 73, 74. But I would see it going below 70 before the cycle's over.
Does it look like crude oil could be heading higher?
Well, the crude oil crowd is correctly pointing out that crude oil is pretty cheap right now, and the shares of crude oil producing companies in Canada are pretty low in relation to past history, and especially when you look at the dividends that they pay and that sort of thing. But as you and I have discussed many times, I'm looking at the longer picture, and the longer picture is very poor for crude oil because all over the world, people are switching transportation to electric. Just this week, PepsiCo was highlighting the fact that they have, I think it's 86 now, highway trucks powered by Tesla motors, and they're called Tesla semis, and it's about to be rolled out, and that is a huge user of diesel. So just to give you a rough idea, that there's about 20 million barrels of oil consumed in the U.S. on a daily basis, and about 45% or 9 million barrels goes into transport, light cars and light trucks, not counting highway trucks or trains or planes or anything, just cars and light trucks, 9 million barrels. And if half of them are converted to electric, which I think is happening very quickly, the U.S. is a laggard, but compared to China and some Norway and parts of Europe, and even Canada now is up to, I think the latest numbers are showing 15, 16, 17% electric adoption. That will eat into the consumption of crude oil very quickly, and it'll be permanent. There's no going back. So the longer-term trend for oil is probably towards lower prices and weaker demand. So if somebody wants to speculate in the short term, that's great, but you have to be pretty nimble to play that game when the longer-term trend is lower.
Getting back to the changes the Trudeau government made to mortgages and so on here, haven't Canadian banks already been increasing amortizations into the, say, 70-year range just because people couldn't renew at their current rate?
Exactly. Well, some of them were infinity. So the way you get to infinity on the mortgage amortization is because people they have a variable rate mortgage, and some of these variable rate mortgages, there's a little gimmick that some of the banks, not all of the banks, but some of the banks used. We said, we won't increase your payment even if the interest rate goes up. We won't increase your payment. Well, of course, the interest rates went up from close to zero. I think some people got variable rate mortgages at 1% or 1.5%. And then the rate went up to 5 or 6% on those same mortgages, but the bank kept the mortgage rate at a fixed amount of, say, $2,000 a month or something. Well, maybe $2,000 a month at the new 5% interest rate wasn't even enough to cover the interest. So that means that every payment they made, they were falling short of paying the interest, and they were paying no principal. So basically, that's an infinite amortization, and that's where they got that 70-year number. And the banks, they don't fully reveal in the data that they send out where everybody's at, but I think most of that's been resolved, although people keep throwing out numbers that there's still half of the mortgages have not had to renew at the higher rates. Now the rates are starting to come down, but in the meantime, the banks are, the way they look at it, so I talk about the banks because they've got 80-90% of the mortgage business in Canada. They tend to be fairly hands-off as long as people continue to make their payments. They don't care if somebody doesn't make, if the payment isn't enough to cover their full amortization that was agreed to at the beginning. The banks don't really mind that because they know that means they're going to make more money. They just keep adding the shortfall to the back end of the loan. And it's like getting a new loan, basically, for them. So it's good business for them as long as the person doesn't default. And the history of default in mortgages in Canada is that people do not default. So the banks all know that, and and of course, as long as something hasn't changed where people start defaulting on their mortgages, there isn't a problem with these longer amortizations. But I remember. It's many years ago now, it's 40 years, but people used to get mortgages. They used to buy their first house, and they would, as a young couple, they would concentrate all their energy, because interest rates were 10% or 15% or something like that. They would concentrate all of their finances and energy into paying off that mortgage as quickly as possible. Well, those days are gone. Everybody says, well, I'll make my payment, but I don't care if I ever pay off that mortgage. I'll just sell the house down the road for a big profit, and everything will be good. So are we ever going back to those days where people concentrate on paying off their mortgage? I mean, that was the financial planning. You get a house when you're 30, let's say. You spend the years from 30 up to 55 to pay off the mortgage, 25-year amortization. You work another 10 years from 55 to 65 with no mortgage so that you can save a lot of money for retirement. Then you retire at 65 and it all works out. And that financial plan seems to have gone out the window now. So everybody's doing something different. But the key thing is the debt. So the debt is toxic, and this is something that has been left out of the equation for probably 2 or 3 decades now, since 2000 for sure. Well, that's 24 years. And will it ever go back to where people are afraid of debt, where people see debt as a dangerous thing to have? I think they will, but it's going to take a pretty big sledgehammer over the head to get people's attention to where the point where they start to get frightened of debt rather than eagerly embracing debt, as we've had for a long time now.
Could increasing the insured amount of a mortgage to $1.5 million be designed to remove more risk from the debt-laden banks and move that risk on to the taxpayer?
I don't think it would be that. People give the people that do these things too much credit for being forward-thinking and stuff. Most of these things are done in reaction to a problem. And in the case of this $1.5 million, it's a very interesting situation. There's obviously a lot of new, it's probably designed primarily for new properties that have been built or are about to be finished, completed. And the Toronto real estate market is really weak right now. Like, the prices have come down 20% from the peak in the index, but it's probably much worse than that, because the official index that is put out, they do some manipulation of the to get a benchmark price. They remove some outlying price changes. So it's kind of a moderated version of reality, I guess. And so it's probably much worse than 20%. So there's a lot of projects, especially condos. There's just a nightmare developing condos in Toronto, where the prices have been coming down, and people aren't buying the new condos at the high prices, but people committed to these prices 4 years ago. So how do they get around this? Well, they say, well, the bank isn't going to lend somebody $1.5 million to buy this new condo, which they know is going to be worth less than $1 million in a couple of years from now, unless they get some kind of protection. So the insurance is not for the new condo buyer. The insurance is only for the lender, and it means that they can't lose money on that loan. So that's the only way they're willing to make the loan, and I'm sure there was lobbying from the banks. There was lobbying from the big developers who have 20,000 condos that are coming onto the market in the next year and a half, 2 years. That's a huge supply that cannot be taken and absorbed without some kind of extraordinary measure. So I think that's what it's about. And I think they're just reacting to pressure from lenders and developers to say, you got to do something. We need help. But it's not going to work. The condo market is in a vast oversupply right now. Nobody really wants these condos, and what the people want are single-family homes for families, and there's a real shortage of that. But there's an oversupply of condos that were basically designed for investment, not for living in, and it's going to weigh on the market in Toronto, and to some extent other cities too. But Toronto seems to be the epicenter of the glut, and I suspect that's what this measure is all about.
Are the mortgage portfolios at some of the Canadian banks and credit unions concerning?
Well, they're very large. The amount of money. So in other countries like the U.S. and that, the banks are active in many other activities. But in Canada, because the lending for residential housing and other household spending like HELOCs and credit cards and auto loans was such a good business, the banks gradually moved more and more into that area. Now the banks, some of the bigger banks, like the two biggest ones, TD and Royal, have made major expansions into the U.S. But in the U.S. their emphasis has also been on retail banking. They call it consumer banking, retail banking. So it is a concern because, as I mentioned a minute ago, the two highest countries in the world are Australia and Canada in terms of the amount of household debt that they have in relation to GDP and incomes. So if something happens to that consumer banking model, then it is a major concern. And they don't have as much activity outside of that. They don't have the Goldman Sachs, JP Morgan, Morgan Stanley type activity where they do a lot of business that isn't related to the household consumer retail banking activity to fall back on. So that is a concern in Canada. It's been a very stable business. Like in Australia has 3 big banks. Canada has 5 big banks, although 3 of the 5 big banks are bigger than the other 2. So a total of 6 or 7 or 8 banks in the world between Australia and Canada that are heavily involved in this whole bet on the household, the individual household, borrowing incredible amounts of money to own property, which is all dependent on property prices not going down. Yeah, that's the reason I wrote the book, and the 2 editions of the book. That's a major concern. Seems like a bad idea to me, but it's worked very well for those 7 or 8 big institutions in those 2 countries for many, many years. Now there's another country, China, that has got a tremendous bet on households buying real estate, and that's the cracks are starting to show in that one.
Increasing the insured amount of a mortgage from $1 million to $1.5 million, what income is needed to qualify for that $1.5 million mortgage, and what percentage of people could qualify?
Yeah, so that's a really good question. I don't know off the top of my head the answer to that one. I know that one of the things that happened in the last 5 years or so is the amount of insured mortgages that were put out was shrinking every year. It would come out smaller and smaller to the point where it's 80% uninsured and only 20% insured. So the difference is that on the insured mortgages through CMHC, and there's a couple other private insurers, one's owned by Brookfield, the government imposes some very strict restrictions. So you have to meet these minimum income requirements, minimum asset evaluations, that sort of thing. But if you go to the bank with a 20% or greater down payment, the bank has a lot more flexibility, and they don't have to deal with CMHC rules and that sort of thing. So that's, I think, why so many of the 80% plus portion of the purchases in the last few years have been uninsured mortgages. So this new one with this extension to 1.5 is going to be closely scrutinized. There's a stress test that has to be applied. You have to qualify as if rates were at a pretty high rate. This goes back a few years when rates were down below 2%. Those people allegedly had to qualify as if they were paying 5% interest on that loan to get there. But the qualifications are such that you're not allowed to have more than 30, 40, 50% of your after-tax income in going to your mortgage payment. And there's 2 different ways of calculating it. And I think most people, even if they have a couple $100,000 in family debt, would have real trouble qualifying for a $1.5 million loan, which begs the question of, as I mentioned earlier is what is a family that has that kind of income doing, trying to buy a $1.5 million property if they don't have at least $300,000 saved up as a down payment? It doesn't make any sense. It's crazy, really.
Are the sales of homes over 1.5 million likely to languish?
Well, it's not clear where the higher end homes, the buyers of higher end homes have come from. It's not first time buyers, obviously. It's people that are moving up. So the move up market is basically what it is. So somebody buys goes back 20 years, buys a $500,000 home, delighted to see it's now worth $1.5 million. They sell that, and they move up to a $2 or $3 million home. And so all they need to do is, especially if they paid down the mortgage, all they need to do is come up with the difference. And a lot of times they're able to do that. So that's what's happened in the past. But now there's two problems. One is and this is why the $2 or $3 million homes are struggling to find buyers, is there isn't that easy to sell those lower priced homes so you can move up, and the interest rates have now gone up to a point where it's much harder to qualify for a bigger mortgage to get to do that move up. CMHC put out a report in the spring after rates had gone up so much, just before the rates were starting to be cut. So Canada's cut rates 3 times now, 3 25 basis point cuts, so a total of 75 basis points, not quite 1%. But in the spring, when CMHC put out that report, they said that the risk on mortgage debt has doubled probably from where it was 4 or 5 years ago. So that's where we are. We've got a much higher risk in the mortgage market. And what happens with lenders is they get more cautious. Like they were all in the sales mode for quite a few years, just trying to encourage people to take on more and more debt. Now they've got their compliance hat on. They've switched their sales hat for a compliance hat. Now they're asking a lot more questions than they were about, do you really qualify for this? What's your, all the different aspects of the conversation about whether they should make the loan or not. And that, of course, tightens up availability of loans, which makes it harder to buy those more expensive properties. So, yeah. And the other source of money for those higher end properties is foreign money coming in, and that with one of our biggest banks, TD, has just been hit with a massive multi-billion-dollar fine from the U.S. It's always the U.S. It's never Canada. Canada never seems to catch these things. But the U.S. regulators have hit TD with a multi-billion-dollar fine for failing to detect money laundering. So the money was coming in from bad sources, whether criminal activity or whatever, illegal anyway, in some way. And they've been caught. And so now, throughout that whole organization, and TD's probably the biggest, TD and Royal sort of back and forth between the two biggest banks in Canada. It'll affect them. It'll affect them dramatically. Like the fact that they got caught, the embarrassment, the repercussions, the added regulatory scrutiny. They're going to be much more difficult to deal with. And so those big wire transfers coming in from other countries like China or China's probably the most likely one, but there are other countries too. Multi-million-dollar wire transfers are going to get a lot more scrutiny than they were before. They've always been required to be scrutinized, but I guess the fact that TD got caught for failing to scrutinize these transactions shows that maybe the banks weren't as careful as they could have been.
In most of Canada, housing inventory continues to increase as sales continue to slow. Are the mortgage market changes likely to increase sales and decrease inventories?
I don't think so. I've obviously, when I wrote the books in 2015, 2018, I was obviously very early. Some people would say wrong, but I think that the bubble is still getting bigger, and it will burst at some point because all bubbles do burst if it's truly a bubble. So I don't think that those changes are going to be enough to get us out of this situation. The big question is, where we started talking about the recession and whether the rate cuts will engineer a soft landing or whether we'll go into a hard landing or a recession. That will determine what happens. So if we go into a soft landing and inflation comes back up again and the bubble continues in the stock market, it'll probably help the real estate market as well. But if we go into a recession, things will just get worse because those expensive homes, especially in Vancouver and Toronto, are overhanging the market, and there just aren't that many buyers. Especially as we were talking about foreign investment coming in under much greater scrutiny. The typical family in Canada just doesn't have the income to support those kind of prices. That's the whole definition of a bubble, was the ratio between the house price and the average family income in Canada was not nearly enough compared to other countries or compared to the past. Typically it was 3-4 times household income. That was where a house should trade at, which let's say the average household income is 100. 3 or 4 times would be 300,000 or 400,000. It was like that for decades. And then all of a sudden now we're up to 11 times in Vancouver and 9 times in Toronto. That has to be resolved. There's only 2 ways it can be resolved. One is incomes go up quickly, but that doesn't happen in a recession. In a recession, incomes actually go down, or house prices have to come down. So it'll be the second one. To clear all that expensive inventory out, prices would have to be cut dramatically.
The Canadian economy seems to be built on real estate. Does Canada continue to have one of the biggest housing bubbles in the world?
Yeah, second only to Australia. It's basically, I guess New Zealand you could count. New Zealand's a very small country though, so of the bigger countries, Australia and Canada are kind of leading the market. China had a very big housing bubble, but it's been bursting now for at least 3 years, and prices haven't come down that much yet, but certainly the activity's dried up dramatically. The government doesn't know what to do about it. There's other places like Switzerland shows up when you look at the numbers, but Switzerland's a very unusual situation because the whole country is based on providing banking for people that are trying to hide their money. People from other countries trying to hide their money in Switzerland. So the housing market there is not a real housing market like would be in a normal country. So the Canadian housing bubble is still right up there, probably second only to Australia.
Are Canadians having trouble affording their daily needs? And if they are, could this affect the housing market more than the changes to the mortgage market?
Oh, absolutely. That's the key thing, and especially if we go into a recession. It's showing up in auto sales. It's showing up at Canadian Tire. Canadian Tire's had several quarters of weak sales. They've mentioned it on their quarterly calls. People are going to have to cut back on other expenditures like vacations in order to prop up that ownership of that property, the big mortgage payments that they need to make. So for sure it's going to show up.
Trudeau's planning to send tens of thousands of migrants to BC and Alberta. Where are they going to live?
Well, the nice thing about Alberta is we can build an unlimited amount of housing on the outskirts of the 2 big cities, Calgary and Edmonton, and that's what they're doing. There's just an absolute phenomenal building boom going on in the outskirts of those 2 cities, and relatively quickly they can be built, and I think it will be handled. The bigger question is, what about healthcare and what about schools? That's the problem. The housing can be fixed really easily, but the schools and the healthcare are going to be a real challenge.
Increasing crime and societal decay in major cities in Canada, including Vancouver. Do you think housing in safe areas will be able to demand a premium price compared to the less safe areas?
Yeah, I would think that's already happening, and that's definitely one of the problems with the move in Edmonton and Calgary, for example, to try and revitalize the inner core. The amount of condominium construction, especially in Edmonton, was huge, and they're just finding it almost impossible to get people that want to live in the downtown core because of the increased presence of homeless people and drug addicted people. People just don't feel safe, and that's a problem that nobody knows the answer to right now.
What's happening with China's real estate market?
So China's real estate market, you and I talked about Evergrande, one of the biggest Chinese developers going back to 2021. They never did resolve that company, and now all of the big development companies in China are in trouble. The projects are sitting on the market. The families have bought their condominiums in those properties. The properties are not finished because the developer has run into financial difficulties. So the Chinese government, both at the Beijing level and at the local level, have tried to help these developers finish these projects and try and figure out a way to stimulate the demand. But the average family in China is scared to put any more money into real estate. They've already got one of the highest percentages of their savings in real estate in the world. That was always viewed as a safe thing to do. And they always felt that the government would never let prices fall, but now the prices are falling, and the demand is not there, and these developers are in really serious trouble. So several of them, like China Evergrande, have gone into bankruptcy or receivership, and foreign investors are losing their money, so there's no more foreign investment coming in. And the government has yet to find a solution to bail them out and get things going again. They keep announcing plans almost every 3 or 4 months, and none of the plans so far have worked.
Do you think a recession would cause an increase in electric vehicle sales over internal combustion engine sales?
Well, I think that the electric vehicles are cheaper to build than ICE cars because they're much simpler. And so China has a whole bunch of electric new models, beautiful new models, highly sophisticated computerized vehicles ready to roll from several manufacturers. Tesla has a factory in Shanghai, but there's several other countries, BYD being the leader, several other companies that have models that are as cheap as $10,000, even with the 100% tariff that the U.S. is putting on imports from China. The car is still going to be cheaper than the cheapest regular domestic-made car. So yes, because they're cheaper, they're likely to gain market share if they're allowed to appear in North America. But the government in North America, of course, is trying to protect their own domestic producers, and especially the labor unions that are attached, at least up until the election. I don't know what happens after the election, but before the election, there's definitely not going to be a wave of cheap new Chinese electric cars hitting North America's shores. But in 2025, we'll see. I think in a recession, that would be what would happen.
Have you driven any other electric vehicles other than a Tesla? And if you have, how do they compare?
I have not. You know, it's interesting question. I didn't realize that I'd never driven a non-Tesla vehicle. I drove a hybrid once, but that was all. The hybrid isn't really like an electric vehicle, a fully electric vehicle. I'll work on that for next time we talk. I'll try and see if I. But there are a couple of offerings from Korea, for example. I haven't seen any of these Chinese ones. They would be the most interesting ones, but you'd have to go to China right now to get a chance to drive them, or other parts of the world where they're allowed to people are allowed to buy these new models. But I think from what I hear, there's some new vehicles coming that are exceptionally good, especially from China. So we'll try and get our hands on one of those and check it out.
Hilliard, where can people follow you?
I'm active on X, formerly known as Twitter, under HMACBE is the handle, and I'm on LinkedIn people can find me on those platforms really easily. We're pretty involved, and let me know. Let me know if you want to ask a question. I'd be happy to answer it on just send me a tweet or a message, and we can chat.
Hilliard, thank you so much for being on This Week in Money.
Thank you, Jim. My
guest has been Hilliard MacBeth. He was speaking to us from Edmonton. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, John Rustad, and Hilliard MacBeth. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.